Okay, folks, welcome back to the Contrarian Trader. This is Robert Desmond, and welcome to the week ahead. Since the last time I posted video on YouTube, we placed a number of trades, a couple of them that were short, and we took half profits on the table. I'm just going to do a recap of them. On 6-3, about here, we took profits on the FAZ, which is a triple short of the financials. We got in on the FAZ back here when nobody else wanted. Everybody was bullish on the financials. We got out around here. Now, did we get out at the top? No. Did we get in at the bottom? No. But we made a heck of a nice profit on the way up. Now, we still have a position in the FAZ, but now it's time to begin to get back in full force on the FAZ, as well as another position where we were long. These are short funds. The FAZ is a short fund of the financials. TZA is a short fund, 3 times a short fund. Very volatile, not for everybody. Please, folks, not for everybody. We got in way back here when nobody else wanted it. We got out, half position. We're still long this position, half of what we had. Back here, again, did we get out at the top? No. Did we get at the bottom? No. You build positions and you cash out half your positions. That's scaling in, scaling out. Our long-term position on this market has not changed whatsoever. Now, you might say, well, Bob, you missed this recent rally. No, we didn't. On the 15th, I sent out an alert to my subscribers saying, let's get long of the SSO, which is the ultra long fund on the S&P 500, because a couple of things couldn't be denied. One is that you had these bottoming tails here. And this is a double bottom, or a W formation, which I like to use every once in a while. That phrase. You had this first leg, rally, came back down, held support. Can't ignore it. If you ignore that, you're going to miss a rally. And if you're still short, you're not going to be hedged. So what do? We hedged our positions, and we rode this rally up from about here, and we have a nice little profit in the SSO. I don't anticipate staying in this much longer. I do anticipate rotating out of the SSO. I'll send out an alert to subscribers. We'll get out of that position, and we will we will add to our FAZ, TZA positions once again. Another position that we went short of since I last posted was Coinstar, CSTR. Beautiful rally here. It came up on my screener that we should get short. I took a look at the weekly. This is a weekly chart. And it told me with this huge topping tail here that we'd want to get short this position. We did. We only spent a few days in there, made a decent profit on it, and then we got out. So this is what's been happening since the last time I posted on YouTube. So we've been making money in both directions, and that's what's critical to trading in these volatile markets. Now today, you had President Obama came on and did his radio address. And I have to be honest, folks, every time this man speaks, it only reinforces my conviction that I must stay short this market. Because what he did today was only to stick his thumb once again in the eye of the Republicans, treat the American people as if they're a bunch of morons by pretending that they don't have control. The Democrats, the liberals don't have control of Congress, and they can do whatever they want. But no, what he's going to do is he's going to take his thumb, stick it in the Republicans' eyes, saying that they're holding up the extension of unemployment benefits once again to people that are out of work. Believe me, my heart bleeds for these people. But this country was not founded on welfare. It was founded on entrepreneurship and pulling yourself up by your bootstraps. These banks need to start lending. They need to start lending to the small business. If they do not, you will not see a sustained recovery. Now, to the point where he said that we are having a sustained recovery, it's a mockery. It's to treat the American people as if they're children. When you have a sustained recovery, this is a chart of a 10-year yield on a 10-year treasury. Take a look at this. It wants to go down. It wants to go down. If you have a strong market with cheap money and a recovering economy, the pressure on yields is to go higher because the bond investors are afraid of inflation. They want more yield. So since there's since there's such fear about Europe, Asia is slowing down, and inflation fears aren't what they should be as of yet, but they will be soon once the bond vigilantes turn their attention towards the United States. For now, anyway, the yields are going to stay low because there is no recovery. There is no recovery. You had Fedex, Charter Fedex, came out last week. It had been outperforming the market. FedEx told you back here it was rolling over. It was getting tired. But finally this week, they came out, reported bad earnings. I thought the economy was recovering. Apparently not. So Obama comes on, and another statement that he makes again today about the Republicans is that they don't want to extend the first-time home buyer tax credit. I'm sorry, scratch the first time. The home buyer tax credit, because now he wants it to apply to everybody. He says that they're playing politics due to the election season. The president himself is playing politics. And the reason why I say this is because what they are doing with these tax credits is they are dragging demand from the future and pulling it into the present. And if he can get this passed, he is hoping to see a surge in home sales, stabilize demand and pricing for housing, and that way he can go into election season with his supporting his congressional candidates, saying the economy is recovered. And then as soon as the election is over, the tax credit would expire, and what's going to happen? Mortgage applications are going to decline. Building permits are going to decline because the demand is not really there. It's a phantom recovery. It's all a phantom recovery built upon cheap money. So until I start hearing that we are going to cut taxes for the American consumer, the American middle class, I refuse to believe that there is any type of recovery that is actually happening. The bond market doesn't lie. This is not a lie. This is the yield of the 10-year bond again. I can't say how important this is. It's critical to watch. The world economy is in a downtrend. Take a look at the Baltic Dry Sea Index. I mentioned this to my subscribers often. Take a look. It is breaking down. This is a measure of the pricing power of the shipping industry, and it is breaking down. And this is all because that China is slowing down. The world is slowing down. There is no growth in the United States. If there was growth, do you think you would see commodities such as steel breaking down? It's a mockery, folks. So please, don't listen to the politicians or to the thugs on Wall Street. Don't allow them to play you or take parking space up in your head. I beg of you. You need to learn how to trade this market, and the way to trade this market is to be net short. You can be net short and trade around those positions to the long side, like I just demonstrated. I just said that we were long the SSO. Why am I giving you that free information? It's because it's free. Don't expect me 2 weeks from now when I come back on here to be long of the SSO. Is it possible? Yes. Is it likely? I highly doubt it. So I strongly urge you, do not get long the SSO. It's too late. You need it to be long back here. More than likely, we are going to roll over, break down. Just take a look at the volume bars. The volume is indicative of the future direction of the S&P 500. It's just dropping off of a cliff. So, folks, if you want to learn how to trade these markets, I beg of you, take advantage of the 14-day free trial offer. Sign up for the Contrarian Trader. And if you have any questions, shoot me an email, bob@thecontrariantrader.com, and I'll talk to you soon. I'll post a copy of that video that Obama did on my website, so expect that as well. All right, folks, have a great trading week. Again, if you have any questions, shoot me an email, and be careful, okay? Please be careful. Have a great weekend. Happy Father's Day to everybody, too.